Hello, family. This is your boy Nanaya of Nanaya FX Hub. So, for about a week ago, we have been going through introduction to Forex trading, and we've done a lot of lessons. You can check the channel. If you are a beginner, this is going to be very helpful. But today, we are going to go into the basics of ICT, some simple terminologies of ICT, what it means, how to find it on the chart. And in our subsequent videos, we are going to dive deeper into ICT. So if you follow our lessons, you wouldn't necessarily have to pay for any mentorship. I'm going to give everything to you on this channel. And if you have any questions after the video, just type them in the comment section and I'm going to get back to you. So let's get into it. Simple terminologies in ICT. We have what a lot of people talk about, order block. What is order block? So usually we say it is institutional entry zones where institutions enter their trades. How do you spot this? How do you understand it? How do you even know that this is a correct order block? That we're going to do in the subsequent video. It has to come with other things, right? But then to identify order blocks simply, on the chart, it is the last candle. For example, if you're looking for bullish order block, it is the last bearish candle that forms before a spring up, right? Yes, and I'm going to show you a pictorial image of what it looks like. So let's look at this. This is the last bearish candle you see before this bullish move. So this becomes what? Our bullish order block. Yes, and usually when the order block comes with a fair value gap, which we're going to talk about the next, usually it is a high probability one. And you can see that as price came here, it moved. Yes, we will see it in the next one. Understanding the terms. So yeah, this is a bullish order block, right? Yes, and when you turn the chart, you will see it as what? Bearish order block. Yeah, so that is simple. Simply put, what order block means. Now let's look at the next one. After understanding and knowing what order block is, now let's look at the next one. Fair value gap. What is fair value gap? Some people call it imbalance. So when you have three candles that forms, when you have three different candles that forms like this, successive candles that forms like this. Yeah, I'm very bad at drawing. Yeah, when price moves like this, it leaves a gap here. This gap is what we call a fair value gap, or some people call it imbalance, right? So it's usually caused by strong momentum in the market. Yeah, and we usually expect price to return and fill it, right? We expect price to return and fill it. I'm going to show you an example from the chart. So this is a very nice fair value gap. You can see here a strong momentum came, price formed an order block here. Then you see this is the first candle, second candle, and third candle here. So price left this fair value gap here, came in, then another what? Impulsive move upwards. So now we have combined order block and fair value gap. So what did I say about order block? So order block is the candle, for example, if it is bullish, so if it is bullish order block, it is the bearish candle that forms right before an impulsive move, right before an impulsive bullish move. So you can see a very nice order block left here, and the fair value gap It is caused by what? A strong momentum. Always, we say that it's caused by a strong momentum. You see, this was a very strong momentum, and a gap was left here. That is a fair value gap, which is supposed to be filled before price moves continuously. So that is order block and fair value gap. After understanding order block and fair value gap, what again do you need to understand? The next term we are going to talk about is called liquidity. Yeah. So liquidity is usually where you see stop losses, where retail traders usually put their stop losses, right, and pending orders because they expect price to come there. And it's usually found at the higher highs and the lower lows of the price movement on the chart, right? So usually we say that the institutions understand where these stop losses are. That is where we call the liquidities. Yes. So how do you identify liquidity on the chart? You can see this. Price moves up and it leaves these highs. You see, it leaves these highs here. Usually we call this liquidity. We call this liquidity. Usually when retail traders enter trades, for example, if they enter here expecting price to like come down here, their stop losses are usually put at this high, and it is called what? The liquidity point. Yeah, that is how we understand that there are some stop losses over there. And if it is so, institutions would want what? Would want to sweep this liquidity. That takes us to our next point. Liquidity sweep. What is liquidity sweep? So price intentionally takes the stops, right, at these liquidity points. So when price sweeps up, we call it what? Liquidity sweep. It could be a buy side liquidity or a sell side liquidity. So for example, what I showed in the previous picture was what? Was a buy side liquidity, as you can see. So this is a buy side liquidity, and we can see another liquidity here. You can see another liquidity here. This is a sell side liquidity, right? Price came for all of these lows, right? That is a sell side liquidity. So we call this liquidity sweep. Liquidity lies there, price comes and sweep it and continue to go the direction it ought to go already. You see? Yes. So now we understand order block, we understand fair value gap, and we understand liquidity and liquidity sweep. Now the next term we are going to talk about is premium and discount. Premium and discount. A moment, let me clear this. Then we go ahead. Premium and discount. So to understand this on the chart, I have to show you on the chart. So we have a premium point and discount point. For example, when you go to the market or supermarket, you want to buy anything from the market. When price is at premium, you see that it is expensive. And when there is discount, you see things are cheap. So people would want to what? Want to buy. So when its prices at discount, we buy, right? And when it is premium, those who hold the goods want to sell at premium. So we sell at premium and we buy at discount. This makes sense, right? And we have the equilibrium point, right? That is the 50% between premium and discount. And I'm going to show you how that looks on the chart. You see? Yeah. So this is an impulsive move. And when price moves like that, it creates what? Premium and discount here. So all of this part is what? Premium. So we would want to find sales here to the discount part. And when price comes to the discount, we want to buy because now it is cheap. You see, then we continue up. This is simply how premium and discount means. So yes, today I'm not going to do a lot. These technologies are okay. We've talked about order block, I've shown you on the chart, we've talked about fair value gaps, and I've shown you on the chart, we've talked about liquidity and liquidity sweep, and we have talked about premium and discount. I do not want to bore you with a lot of things, so we are going to end here today. In our next video, we are going to dive deeper into the technicalities of ICT, and little by little we will add all of them up, and by some time you see that you'll be able to use this to start your trading career, right? Yeah, so if you want more of such lessons, follow our channel and subscribe as well, and comment ICT if you want part 2 of this lesson. So that'll be it for today. Peace out. See you in the next video.